do anything to achieve the Fed's 2% inflation target. I think a lot more would be needed, not only a bigger rate hike, but the Fed would have to do something about the size of its balance sheet and money supply growth. They would have to shrink the balance sheet and start shrinking money supply, the opposite of what is continuing to happen so far ever since Warsh took over as Fed chair. But anyway, it was not a unanimous vote. There were 3 FOMC members that did vote for a quarter-point rate hike, but Kevin Warsh was not among them. He voted to leave interest rates unchanged. The rate is 3.5 to 3 3/4. By the way, that's where the rate has been since December of last year, when the Fed cut rates by 25 basis points. But for 5 months before Warsh took over, rates were exactly where they are right now. And Warsh has been FOMC chairman now for a couple of months. This is his second press conference that he had today, the second opportunity that he's had to match up his rhetoric with actions. The markets thought there was a 30% chance of a rate hike. Why not deliver one? The fact of the matter is, and I've been saying this from the beginning, he's all bark and no bite. He can talk the talk, and he talked it again today, but he can't walk the walk. And the markets now are starting to take notice of what I have been talking about. Now, first of all, before he took the Q&A, he delivered his prepared remarks. And during those remarks, number one, the first thing he did was praise the committee. Oh, how great the committee is. They've done an excellent job, right? Everybody is great on the FOMC. Talked about how great the economy is, how resilient the economy is. And I think he does that because that's what Trump wants to pretend. So I think he wants to continue the pretense by reiterating how we've got this great economy so Trump can take credit for it. But then he continued about how the Fed is resolute in its resolve to bring down inflation. It's resolute. And he also said that given the fact that inflation has been above 2% for over 5 years, that the markets may believe that the Fed really has a inflation target above 2%. After all, if the inflation target really was 2%, then why would the Fed tolerate it being above 2% for so long? Maybe it's a soft 2. Maybe the Fed has a secret target that's north of 2, and it's just not letting the markets know. Well, what Warsh wanted to make sure is that that belief was extinguished, that it's not the case, certainly not under his watch, even if that may have been the case, and he didn't admit that it was, but he made it clear in his rhetoric that it's not the case now, that the Fed does not have a secret target higher than 2%. 2% is the target. Now, of course, it also means that if 2% was the target all along, if there was no secret higher target, then the Fed failed. The Fed was not able to achieve 2% inflation, despite the fact that that was its goal. And of course, the reason that the Fed never achieved 2% inflation was for precisely the reasons that I stated in the past. Monetary policy never got restrictive enough to reduce inflation to 2%. In fact, monetary policy remained accommodative despite all of the Fed's rate hikes, because the entire time the Fed was hiking rates under Powell, money supply growth only shrank briefly, credit never contracted, the government, corporations, individuals continued to borrow more money. So you had more credit chasing a supply of goods. Remember, inflation is not just the expansion of the money supply, but the expansion of credit. because you don't need money to buy stuff. Just ask just about any American. You could have no money and keep on spending because you can spend credit as easily as you can spend money. And spending credit also pushes up prices. That's the demand. If the Fed wants to get inflation down, it has to bring down that demand, which means it has to raise rates enough to tighten credit. Consumers have to borrow less. The government has to borrow less. Businesses have to borrow less, but none of that happened. Everybody kept on borrowing and kept on spending, and that's why inflation didn't go back down to 2%. Now, it went down a little bit. The taper, the rates came down from the peak, but that was just temporary. Now we're seeing a resurgence because the inflation fire never got put out. The Fed didn't want to, because as soon as you got problems in the economy, as soon as you got banks that were failing, that's when the Fed stopped hiking. And I said this all along, the Fed surrendered. In fact, Powell always made a big deal about the fact that, hey, we got rid of inflation without causing a recession, without seeing a meaningful increase in unemployment. And they were bragging about that. Like, hey, nobody thought we could do it. We pulled it off. Well, the reason they won the inflation war without that collateral damage is because they really didn't win. They surrendered before the damage became too great. And that's why inflation never went away, because the Fed didn't have what it takes to get rid of it. It chose inflation, which is something that Warsh gets right. He says inflation is a choice. Absolutely. His predecessors chose inflation, and it's obvious by his deeds, not by his words, but by his deeds, that Warsh is making the exact same choice for the exact same reasons. That's why he didn't hike rates today. Why? Because had the Fed hiked rates, the markets would have tanked. Now, they tanked anyway. They just would have tanked even more had they raised rates. And I think that's why he didn't do it. But again, he can't admit that. And I pointed this out even before I get into the Q&A today. I pointed this out based on the press, on the testimony from a week or two ago when Warsh testified before the House and the Senate, and in particular the Senate, when Senator Kennedy asked him specifically, what are you going to do to reduce inflation? And he had three things that he was going to do, and all three amounted to talking tough on inflation and letting everybody know how committed he was, how resolute they were, how much they owned the inflation problem, and that they were determined, unlike predecessors maybe, to solve the problem. That is exactly what he did. With an opportunity to hike rates, he didn't do it. With an opportunity to, go back to quantitative tightening, didn't do that either. All he did is talk about how tough they were going to be, how they were serious about bringing down inflation, just like he said he was going to do. But he didn't do anything about it. If the Fed really is different, if it's really different now with a new sheriff in town, why are interest rates exactly the same as they were when he came to town? Rates are where they were during the 5 months before he became Fed chair. And if he's basically saying, look, now we're really getting serious here. I'm resolved. We're going to bring inflation down to 2% because maybe in the past the Fed wasn't doing enough. Well, why have you done nothing? I mean, the only thing that he's done is they don't have forward guidance anymore. But other than that, there is no change. It's exactly the same. And so clearly, Warsh is no more serious about bringing inflation down to 2% than was Powell. And in fact, he voted with Powell, right? Powell was one of the other FOMC members that voted to keep rates unchanged. So he's basically voting exactly with his predecessor. Now, it's possible that he actually wants to hike rates, but he didn't want to vote with the minority and have 4 votes. I don't think there's ever been a time that I can remember, or probably ever, where the FOMC went against the chair